Okay, hello everybody around the world. Again, my name is Steve Vetterl. Today is Tuesday, the 21st of April. I hope it is going well for everybody globally. We've all been sort of mired in this whole virus thing. So again, thoughts and prayers go out to anybody being affected by it. I hope it gets better for you. So today we have some craziness in the oil market. It's leading equities around. And while I'm doing this, if you would please, Ryan, give me share capabilities. I'm going to share a screen and go through a quick disclaimer. And I can talk a little about what's going on with the markets around the world. I think the surprise really has been that with the absolute contango, which is really just a pricing dislocation, both forward and backward in the crude oil markets, which has affected a lot of countries over the course of the last day. It hasn't really affected the currency markets that much. So let me quick go in and share our disclaimer.
Yeah, you should be good to go now for share.
Okay.
Perfect.
So risk disclosures, folks. Bottom line is the markets carry high risk and they're not suitable for all investors, as Ryan and I will talk about today. Part of the risk mitigation process is building a trading plan. And there is possibility that you could potentially lose your whole account trading. So I put stress on this each week because compliance is an exceptionally important part of us and the team here at Auvoria Prime and the software that we are representing. But it's also exceptionally important from the standpoint of just your own private little risk mitigation process needs to be put in place. And Ryan and I were chatting a bit pre-webinar, and we were talking a lot about how just sort of putting a drill in place, kind of like they do in the military. So once one thing takes place, you execute just like mechanical. We're going to talk a little more about that today. But for those that are fairly new, my role, just real quickly here, as your risk mitigation manager, is essentially just to analyze what's going on globally, like I typically do for clients in our own trading for accounts, and just dumb that down and put it into simple expectations of what's going on. So doing a deep dive on the settings. We're talking a lot about the settings recently because we've sort of been reflecting on the settings. Ryan has some tremendous insight into some changes in the settings that were not necessarily implemented, but just more building or expanding upon the settings of the past. That's what we're going to do a little bit today. So I'm going to talk a little about what's going on in the oil market, because we've gotten pinged a lot on this, especially from clients and stuff. But so over the last, let me switch screens here for a moment. All right. So over the last, you should be able to see my charts. You viewing that okay, Ryan?
Yeah, you're good to go. I can see your FinViz screen.
Okay. All right, good. So this is the energy markets, and you can see they've obviously taken a huge dive. It's been quite the last 18 months in the crude markets, to say the least. So whenever you hear WTI, it just stands for West Texas Intermediate. Both crude oil, the Brent, and the WTI version, which most traders just trade the WTI. But interestingly enough, Saudi Arabia and a lot of the big oil producing countries in the Middle East, they base a lot of their pricing on Brent. So just know the difference between the two markets. They trade very, very correlated, meaning they trade in almost tandem, but there's typically a pricing difference, and that just has something to do with how the futures, both front and forward contracts, are priced in regards to that. But WTI hit about 70 at the highs near the peak with equities back in Q3 of 2018, and then it fell about 30% in 50 days. So just taking a look at the crude market real quickly. Go back to a daily chart. I think this tells an exceptionally interesting story as far as what's going on in the price of energy globally. This is, it's a little bigger. There we go. So as you can see, the price of oil fallen 30% towards the end of Q3 in 2018. And, we thought that was extreme. And then essentially Iran-backed rebels launched missiles at Saudi Arabia, as you may recall. It spiked up 10%, and then it went down 14% in just 13 days. And through that period of time, Aramco, which is the largest oil-producing conglomeracy in Saudi Arabia, it's ARAMCO, stands for just part of their partnership. That IPO came public, which essentially top-ticked the market. So this year, the COVID-19 virus disrupted demand in an unprecedented way, while supply has never been higher. And that's been really the bottom line. It's been a double whammy. So when OPEC and Russia could not agree on production cuts, crude got hit hard the following day. And then the Saudis surprised in reverse and said that they would increase production, another leg down. And it tried to stabilize in the low 20s. And then when the Saudis and Russia eventually hit production cuts agreement, when President Trump intervened on Twitter and called it the art of the oil deal, now it's getting structural with the contract expiring as of yesterday and falling into a physical negative. So there were massive inflows into a lot of the ETFs. Some of you may know what the USO is, of over $600 million. And that pushed the June contract up by the futures rollout in what's called a contango, which is just a price dislocation. So the market remains concerned that global storage capacity is quickly being depleted. And that's a real problem. They have no place essentially to stock the oil. So Cushing, Oklahoma, and there's other major storage facilities around the world are almost at full capacity. So the bottom line of this is it's basically a flat out disaster for this market. So there are a lot of smarter people than I who are crude specialists, but I can say that the retail flow into and out of the ETFs like the USO will likely see more losses. So for those out there trying to be a hero trading ETFs in any sort of levered form from velocity share or using the USO, I would stay away from that stuff, guys. I'm not trading it. At the bare minimum, if you want to start dipping into just ridiculously repressed prices, you can use the XLE, which is the sector spider. That's more of a broadly based ETF covering the entire energy sector. So that's essentially what's going on with oil. I have no idea what's going to go in the future. We've got to get this major pricing dislocation straightened out. I actually thought it would have more of an effect on other commodity prices. It hasn't, and it hasn't had that much of an effect on currencies, which really doesn't mean anything. It doesn't mean it can't. So the key thing that we're going to talk about, and I'm going to dovetail into this discussion surrounding this with Ryan, is how is this affecting the markets? So just double check we're sharing the screen here. Hopefully you guys can see this is my Einstein here running.
Yep. Yes.
Inside
you're good to go.
Yes. I know that some have experienced a little bit of drawdown. I'm going to let Ryan talk on that. But the key thing here, and I want you guys to really focus hard on this, is putting together a trading plan. In most cases, a trading plan involves a substantial amount of things to be put down in the plan that will build an actual framework for how you would run a discretionary trade. But since we have a semi-automated system, it cuts out most of the trading plan. But what you can put in the trading plan is just a framework surrounding all the mismitigation strategies that I would suggest. And that's just understanding the settings, not going too crazy with the settings. So with that, I'll switch back to Ryan.
Awesome, Steve. Thank you. So before we get too much into settings, let me just ask you more as it relates to the markets from today forward. So without getting back into the oil conversation in any detail, but simply using that as a point of reference to look at the broader picture of just market volatility in general, today being the midway point on Tuesday, and knowing that ideally, retail traders are strongly encouraged as a general point of reference to try to not be in the markets on Thursday and Friday. Help bridge that gap for just about 30 to 60 seconds, if you will. Bridge that gap between what does the volatility in the market tell us about what we should be looking at right now to try to kind of follow that age-old wisdom and best practices of being retail traders that attempt to try to be out of the markets, by the end of Wednesday? You might be muted.
All right, can you guys hear me now?
There we go. Now I got you.
Okay. So here's me just open up the settings here. I had the mic on mute.
I guess to be more specific, so in other words, do you feel like what we saw out of oil the last 24 hours means the markets have an even heightened level of volatility, which would suggest that we should take an even more conservative approach to the remainder of this trading week, for example?
Yeah, I mean, absolutely. I mean, it's as I was talking to myself for the last 20 seconds, that's kind of essentially what I was trying to say. But the interesting thing about that is that, because a lot of people have paying me friends and stuff as they have a whole year with just this complete sell-off and a whole bunch of stuff, including equities. I don't know where the market's going to go either, right? So if I don't know where things are going, I have an idea, right? Then what do I do? What do all traders and professional or institutional fund managers do? They lighten up risk. So if that means turning it off, for a couple of days or having it off for the whole week if you're not comfortable or you don't understand the settings, and maybe jumping into the Auvoria Prime University. I mean, Adeze Dunk has got a great, a whole educational course inside there. It's fantastic. So I've been through probably about a third of the course. It's involved, but what really teaches the core, and that, in my opinion, should be part of the trading plan.
I love that. And so understand when we talk about trading plan, I've had a lot of feedback, Steve, from other people that, their introduction to Auvoria Prime also represents their introduction to Forex in general. And they've had this impression that the idea of a trading plan represents some prerequisite level of specific technical analysis skills and chart reading skills and market analysis skills. And I think when you reference trading plan, and obviously Adeze does an amazing job speaking on this and talking about things from a mindset standpoint for people to understand where their simple risk tolerance is, right? When you say trading plan, my guess is you're kind of referencing the process of people, and not midweek, by the way, right? Not when we're in the height of dealing with the emotion of things like a drawdown, etc. But when the markets are closed and it's a purely rational, objective exercise, as no emotion at that moment, just working through some simple common sense questions like, what is the maximum of capital of all of my risk capital? What's the maximum threshold I want to set for any given week? Is that kind of what you're referencing, Steve, when you talk about a trading plan?
Yeah. So, and by the way, we could certainly talk about this, but I have multiple iterations of trading plans that, I've offered students on the future side of my biz, fxestrader.com, which is a small little coaching company I run. But outside, and I can make that available to the community if there's a lot of interest in what a real trading plan looks like. But the bottom line is you can actually write a trading plan on a single sheet of paper. And it starts with one determining of any available net worth they have. What are they willing to risk? This is not money you're obviously using to pay bills or feed any of your family at this time. It's just money that's risk capital only. You have to really sort of think, what would that be? Would that be 5% of my net worth? If I have 100,000 in cash or investments sitting there, maybe you want to think of putting, 5 to 7 grand maybe in a strategy like this. Just keep it small. If you have a considerably larger amount of money or considerably less, use it as a percentage, and I'll be small, because you can always increase it once you become more comfortable. You put a trade plan together, your education's built up. But you're always going to hear me, Ryan, just echoing the sentiments of putting together a good plan, that's actionable, that's measurable, that's definable, right? And it can be just very simple. But it has to start off with segmenting out, what can I afford to put in a demo account or a live account? Have I run a demo account for a little while, which I always suggest you get a feel for how the software is performing. Simple things like downloading the MT4 platform onto your phone, things like understanding how the platform works on the phone and the platform that you see in front of you through the VPS, understanding how it operates. I mean, it seems like it should go without mentioning, but I found, at least with the ping that I've received from a lot of people this week and different social media channels, they haven't looked through a lot of that. They just went right into it and put live accounts at work without taking and understanding a demo, which I do not suggest. So, just put together a plan, and we can help you do that. I'm going to pull some examples out of my archives that I've used very successfully with students, and we can put some of those in a variation so they'll be effective. But essentially, the plan just involves doing certain things throughout the week. Obviously, it starts with our settings and weekly calls, right? Make sure you've seen them. They're recorded. They're in the back office. You can go in and view them. Make sure you've seen them both each week. And then also you want to look to see how the account's performing, obviously. Maybe make some adjustments to it based upon what we're discussing in these Zoom calls each week to adjust the account settings. Anything you want to add to that, Ryan?
No, I love what you said, man, in terms of putting some emphasis back on a demo account and people not being in such a hurry and almost being hasty about the decision to just dive headlong into live trading without having an appropriate level of understanding. And that's exactly why Auvoria Prime is placing so much emphasis and literally pulling out all of the stops to try to align ourselves as a company. I've kind of got my global director of development hat on for a minute, okay? But everything I'm speaking is truly objective and unbiased, right? Look, the company has gone to great lengths to align ourselves with someone like a Steve Vetterl and his credentials as our chief market analyst, and to align ourselves with a Daisy Duncan, one of the most gifted and reputable, accomplished, and effective Forex educators in all of the land, literally. And because we don't make light of the significance of people expanding your point of reference, having a foundational level of understanding of what you're doing by participating in Forex. Understand something, everybody. Without Forex, there is no Einstein or Alexander, meaning Forex comes first and then comes the software, meaning you have to have a little bit of understanding about what's going on in Forex in general to then be able to apply that to the use of the software tools provided by Auvoria Prime, which is exactly why Auvoria Prime is facilitating your ability to get some basic training. And so I think right along with Steve, I cannot emphasize strongly enough how vital it is to your success as a user of these tools and products to really embrace and dig into gaining a fundamental level of education that's already provided for you right in your Auvoria University before you dive in and start putting real risk capital out into the market without getting that education. And so let's use that as a jumping off point to transition and talk about, in general, the things that you shared at the start of this call, Steve, and how that can translate into software settings. And so I know a pretty hot topic, especially as we start to get into the middle of the week, and people are paying attention to what is being shared on the Saturday market forecast sessions, which I like because people are understanding, hey, I'm in drawdown and it's Tuesday. If you're in drawdown, understand a couple of things in general, right? Number one, drawdown is just a normal part of participating in Forex. I'm watching Steve's screen right now with Einstein, and I'm having a hard time not laughing because here we are talking about drawdown and the floating P&L is positive, which I love. So that's a testament to how good the software is, right? Here we are. trying to have a point of reference on drawdown, and it's basically non-existent. The P&L actually has gone positive, and it looks like the drawdown is 1/2 of 1%.
Yeah, but if you think about it, Ryan, part of the reason the Alexander users, especially with some of the notes I got, are having issues is that they've partially accepted some trades. They're not accepting other trades, right? It's just, it has to be consistent. If you don't know what you're doing, I would think you'd want to accept all of them that come across with Alexander, right? Instead of just, well, I forgot to get to my phone, or, it's going to skew performance because it's only executing on partial trades.
Yeah, and that's a really good point. And let's talk about another rule of thumb, right? Rule of thumbs are helpful for people. And you just brought up another really good point that'll assist people in general and also for the remainder of this week. If you have been away from your, whether it's your computer, your smartphone, and you're an Alexander user, whatever mechanism you're using to either approve or decline your trade opportunities, understand one thing. If you're not quite sure when the most recent set of trade opportunities have come in that are awaiting either you to approve or decline them, go ahead as a standard best practice and decline them. Here's why. Because what the software will do is basically regenerate an updated, a brand new, fresh, updated trade opportunity on that same currency pair. And so you have to be patient for about maybe 60 seconds after you hit the decline button, and it will recreate for you a brand new, just updated new trade opportunity for that exact same currency pair. I do it all the time. So I'm speaking from firsthand experience. And so that is an excellent best practice with exactly what you're saying, Steve, so that people aren't just indiscriminately declining trades without understanding what they're doing. It's fine to decline a trade if you're not sure with Alexander when it came in. Just sit tight for 60 seconds, refresh your trade notification screen, and you will have a recently updated trade opportunity for that same currency pair. And I agree with you, Steve. If people don't understand why they would decline a trade, then they should probably let the software do its job, right?
Yep.
So let's talk about some settings.
Do its job. I love it.
Yeah. So let's talk about some settings for managing the remainder of the week. And I'm going to just kind of throw out some general points of reference, some general rules of thumb, right? I don't carry any licensing of any kind. I'm not here in a capacity that is to be misconstrued of giving any kind of advice in any way, shape, or form. I'm just a guy who has a basic understanding of the settings and what they mean, okay? And so what I see is that if someone is coming into the second, we'll call it the second half of the trading week, which really would mean the last half of Tuesday and then Wednesday, right? And we want to kind of consider our trading week to be concluding itself by the end of Wednesday. So if someone's coming into the second half of their trading week, which is really what this particular Zoom represents each week, the market strategy Zoom is exactly that, starts the second half of the week. And if you happen to be using the trailing equity feature, right? And maybe, Steve, you can click on that. So just so that it highlights under the profit management type there, right? There you go. Perfect. So if somebody is choosing that particular profit management strategy, and you are in some kind of drawdown that you are uncomfortable with, now, let me caveat this real quick, and I'll try not to get off on a bunny trail, but please understand, folks, it's not practical to think of avoiding drawdown altogether. It's part of how this software is designed. It's actually a useful mechanism in both the Alexander and Einstein software strategy. It utilizes drawdown to make you money. That's an intentional component to the strategic design and the underlying algorithms of both Alexander and Einstein. Drawdown is actually your friend, but obviously within reason. And this is why a trading plan is so important, because you have to understand where your own personal comfort level is, all right? And so if you're trying to look at the second half of the trading week and you start to see that your drawdown has gotten outside of your comfort zone, whatever that might be, right? Maybe that's 5%, 10%, 20%, whatever it is for you. Nobody can decide that for you, and there is no right or wrong answer. That is in strict reference to your personal risk tolerance, period, okay? But how do you operate your software strategically once you get outside of your particular comfort zone in drawdown and you really want to adhere to best practices as much as we can anyway to try to be out of the market by Wednesday? Here's the first thing I would do, and Steve, you just tell me if this is good, bad, or indifferent, right? If it was me personally, what I would do is I would convert. If I'm in drawdown and I'm not comfortable with the level of drawdown, I would convert away from a trailing equity profit management type to simply a fixed goal, and I would set my weekly goal at 0. Because if I've heard anything that you've been saying over the time that I've known you and over your several sessions now so far with Auvoria Prime, what I hear you say repeatedly as a theme of long-term successful traders that you've seen over the course of your career is preservation of capital wins out over the profit you can make in any one particular trading week. Is that accurate?
That's correct. So let me just open up the settings again here, getting some errors. All right, there we go. So you could just double click on the trailing equity in order to switch it over into the weekly goal.
Perfect.
Your phone's ringing off the hook in the background.
Yeah, you're running a busy financial management practice, I know. And I appreciate you making time to.
So here's the fixed weekly goal.
Perfect.
You could just make this 0 essentially. I think we should probably build on this a little bit more.
Yes.
The problem is we haven't, again, obviously I'm coming into this with a lot of experience watching this system trade a lot, but not as much experience, right, with the new settings, which have been around, what, a month? Is that right?
This newest version, yep.
Yeah, so about a month. So I think we probably need to do a little deeper dive into some worst case scenarios, I guess, right? So if you're in drawdown a certain percentage in the account, put that into the plan. So I think I'll give some thought in this week to that, and I can clarify and actually maybe just run through some hypotheticals, give everybody a feel for, what I do if I was down 2%, 5%, whatever the case is. But, again, just sort of just dovetails into the broken record that Ryan and I will continue to be. And that's if, you're unclear on how all this should be set or the type of settings, run a demo account first. The great thing about demo is it's basically a demo. It's fake money, right? So you can play around with the settings while you're letting it go.
So without getting, too far off into like a deep dive on the broader picture, and just to kind of help people have some actionable takeaways for this week, here are the kind of the 2 exit strategies that I'm generally kind of keeping an eye on for myself. And then again, I'd like you to kind of weigh in on this. And so if I'm using the trailing equity feature, and if I'm in drawdown, the battle plan, if you will, is convert to fixed weekly goal and move that goal to 0. And now we're simply asking the software to just get us out of that drawdown. Now think about this for a minute, right? Just simple, fundamental mathematics, basic math for a minute. If I had come into the week with a trailing equity start, just like it shows on the screen of 2%, and if hypothetically I'm in a drawdown of 2%, which is like a -2. What I would really be saying is that from this point forward, I need the market to be able to enable the software to go get a 4% gain from where we sit today, to go from a -2 up to a +2. That would be a movement of 4%. And if we're already at the midway point in the week, and if my trailing equity start at 2% has not yet been triggered, that seems like an awfully big ask of the market and of the software from this point forward. Is that making sense?
Yes. I think where probably there's some confusion is to where to enact those changes, right? What percentage of decline?
Right. And so I love what you said, Steve, that you can start to develop maybe some points of reference for people, which we won't do in this call, but we will start to really pull all this together. As Steve has said many times, grant us grace. We're going to continue to progress with these calls every time we do them, which is twice a week, and we will continue to progress in our ability to really quantify for all of our valued customers in the most fundamental and easy to follow communication that we can, because remember, everybody, Forex is a complex space. It's a $6.5 trillion a day landscape, right? And so we're always going to do our best to simplify and deliver actionable content to you. And so I love, Steve, that you're committed to helping to deliver that. And so let's just talk about for the remainder of this week, folks. If you're in a drawdown, you might want to just think like Steve says, think capital preservation, and think about the fact that preserving capital on a consistent basis is going to do far better in the long run than trying to hit some big home run on any given week and then end up with a big setback, right? And so I think a 0% goal is a very noble and worthy goal if you're in a drawdown of more than, for me it would be more than like 2% at this point in the week. For me personally, I would be very happy at that point to just get out of the market at a 0% for the week. Now, what if you're not in drawdown? What if you're in a positive equity position like Steve's account is right now? It looks like you're up about 1.28%, 1.29%. Now, again, Steve, you weigh in on this from your perspective. If I'm going off the beaten path, and we'll wrap it up in another less than 5 minutes, I promise, folks. We've been on a little over 30 minutes, but we want you to have this information so you can utilize it. If you're up 1.3%-ish, it's bouncing between 1.29 and 1.3 as the drawdown fluctuates. And you want to make sure that you're out by Wednesday. I know what I would do in particular here is I would probably take my trailing equity start and drop it down so that it's just underneath where the current week's performance is, so that it causes my trailing equity start to kick in right now. So if this was my account, I would probably go and stick that thing at like a 1.25 right now for the trailing equity start buy, because what that's going to do is kick it in. And then we've got a trail buy of 1%. And so what does that mean? It means we're protecting approximately 1/3% in equity gain for this week. And we can continue to ride it up if the market keeps going in our favor. And so that would be my particular battle drill is I would just be right at a 0.3. And that would I'm sorry, we're down to 1.28 now. So I'd probably be a 1.2. I'd stick it in there at a 1.2. That should get the trailing equity start to kick in. So if somebody were to punch in, now I know you might not want to change what your software is doing, Steve, so you don't have to press the OK button. But if somebody,
the webinar stuff's keeping me from typing stuff in.
Yeah, no problem. And so again, I'm looking at the status panel. I'm seeing a 1.29% week's performance so far. And if my whole goal is to just protect against a drawdown for the remainder of the week, I would stick my week's performance somewhere underneath the current level of performance. So your trailing equity start 1.25%. That's exactly what I would do. And now I know that I don't run the risk of having my account go negative this week based on the numbers that are displayed, based on what you would input right there. And so hopefully that's helpful for people. I don't think we need to delve a whole lot more deeply than this. We gave you 2 actionable steps you can take. One if you're in drawdown, one if you're in positive equity. Remember the name of the game, capital preservation. How do you do that? Well, one of the best ways to do it is that if you're in a positive position now, give yourself a conservative exit from here to get out of the market for the week. And so I don't know if you have anything to add, Steve. Hopefully that was valuable for people. And I'm going to leave it to you to go ahead and wrap it up.
Yeah, I mean, I don't feel under any pressure when I was a trader at the fund we ran, or I would imagine most institutional traders. I don't really feel a pressure to have a return every week, honestly. I mean, it's we're almost living in some sort of altered state here with the software, and we've become accustomed to just getting a return every week. But I mean, in the real world, running real money, especially in size, they don't get returns every week. Sometimes they don't get returns every month. Sometimes they have a loss. So just put it in perspective. If you want to cast a wider net on, maybe put your trailing equity at 0.5. right? Because if you put it at, 1.25, just to play devil's advocate with what Ryan said, you get down to 1.25, get you out. Maybe a big run was in front of you, right? Maybe you could have gotten up to 2 or 3%. So, if you want to cast a wider net, but it all boils down to just feeling comfortable with the settings, which we'll continue to offer insight into all different ways to dice this up. That's
I
pretty
love
much it.
I love that. And then just remember, everybody, any changes that you would be making to your software, you need to make them on each chart where the software is currently running. So you can't just make them on one of the currency pairs. You have to go across all of your charts. In this case, using Steve's screen as an example, we would have to go through, and any changes that we felt were appropriate for our own trading, we would have to input those on all of the current charts. So we'd have to do it 3 times, basically. Or if you know how to save templates, you could do that, which we're not going to get into right now, but we'll make sure that we're putting training courses together on how to do lots of different things with your MetaTrader 4 and with your Alexander and Einstein, and some tips and tricks and shortcuts. And so you can look forward to that kind of content coming soon as well. And so we've been in about 40 minutes. We're going to go ahead and wrap this up. But again, Steve, thank you. You are an invaluable addition to the Auvoria Prime community. I love all the feedback that we continue to get about how excited everyone is of having you on board. And for those of you in attendance today, you are the most valuable part of Auvoria Prime. It's our community of customers. Your legacy matters to us, and just know that we don't take that lightly ever. We're going to continue to raise the bar every week. We're going to continue to provide everything we can to you to enhance your trading experience. And so with that, everybody, go make it a great remainder of the trading week. Stay healthy, stay safe. God bless you. Thank you for tuning in, and we'll see everybody again with Steve on the Saturday market forecast call that starts at the exact same time that today's call did. All right, everybody, God bless. Make it a great rest of the trading week.
All right, guys, be good. See you.